If Credit Suisse can fail, any bank in the world can fail. With over 560 bank failures already recorded this millennium, it immediately raises the question of how fragile or sustainable the existing banking system really is. VortX Capital aims to re-engineer payments and digital ownership. We believe money should move fast, cheap, and simple globally, like sending an email. We started our journey by asking only one simple question: how does one securely transfer $20 from South Africa to Timbuktu in such a way that the recipient receives almost exactly $20 in less than 30 seconds? After doing in-depth research on various traditional payment rails, we concluded that all these antiquated wire systems are slow, expensive, and cumbersome. Payment rails refer to the underlying infrastructure and technology that enable the movement of funds between parties during a transaction. Most of us can relate to this payment problem with our own personal banking experience. Some key inefficiencies of current cross-border payments. Legacy technology. Most banks still use the old COBOL-based mainframe computers from the 1970s and have not adopted to a flexible type open banking API approach with cloud computing. A single server increases hacking risk as opposed to a distributed network of servers. Broken data formats and being error-prone. 35% of all payments sent by banks result in payment routing errors, and 20% of all card transactions fail. It is so bad that some of these errors are only identified upon a complaint from a beneficiary who demonstrates a clear lack of traceability. High operational cost of banks with skyscraper physical branches and being overstaffed. Long transaction chains and disparate. A bank does not have a bank account or direct relationship in every country and requires what is called correspondent banks to help execute transaction cross-border. And if there are different currencies in the transaction in question, this can become even more complicated. Limited operational hours. Banks typically are open only from 9 to 5 and are closed on weekends. USA operates in a different time zone than China, causing even more delays, etc. High funding costs. Liquidity is required at the end destination of the transaction with compliance check complexities, etc. Approximately 3.8 million records are exposed by hackers every day, and if the South African Reserve Bank can get hacked, any banked or centralized app's data is at risk. It is concerning to know that all global online branches are estimated to cause a loss of $8 trillion according to Astra Security from 2023 alone. These insufficiencies cause an average cross-border remittance fee of over 10% and can take up to 5 working days to settle. This opens a high demand for fintechs to dispute this space. Given the fact that the Bank of England has estimated cross-border remittance to be a $250 trillion industry by 2027, it is clearly a massive opportunity to explore. Typically, consumers pay a bank to verify a transaction, but blockchain technology eliminates the need for third-party verification by settling a transaction in real time, making it the most feasible solution to payment infrastructure. A blockchain is auditable, secure distribution database that is shared across several computers, linked together in a peer-to-peer network. Blockchain technology can be used to improve banking infrastructure and payment rails in several ways to enable faster settlement and lower fees while maintaining compliance with regulatory requirements. Blockchain effectively removes the need for correspondent banks and clearing houses. Upon further investigation, we realized that the advanced QI blockchain, Key, is able to handle 300 times more transactions per second than Bitcoin with almost real-time settlement, as can be seen in the following graph, making it our blockchain of choice for the future of banking. Money should move like information moves over the internet today, to offer a frictionless experience in real time with certainty about the full disclosure of a transaction. We intend to provide banks with a standardized API to solve the inefficiency of current payment networks. This will allow the cost-effective, seamless, real-time insight and frictionless payment experiences. This is done in partnership with a world-leading banking sector compliance partner providing a complete end-to-end solution. The partner is already integrated with over 8,600 banks globally. The solution will cater for real-time quote on cost, instant recipient validation, and autofill invoices to enhance the user experience like a normal domestic payment, taking it from manual to automated to pay a foreign invoice. Blockchain-based payment rails can reduce the need for intermediaries, such as correspondent banks, and can enable direct settlement between the parties involved. Furthermore, Smart contracts can be used to automate various aspects of banking infrastructure, such as loan origination, trade finance, and insurance for faster settlements and lower costs. We took it another step forward by providing a world-first and pure 2030 banking vision by creating instant top-level domains, TLD, like .com, for businesses to use as a payment alias or a digital identity system for banks to reduce fraud and errors and simplify payment IDs. A TLD is the last segment of a domain name, such as .com, .org, .net, and so on. In short, it works by the root domain being stored on key blockchain and accessed via smart contracts securely over the decentralized network of servers. By associating a TLD with a wallet address, users can easily send and receive payments by using a simple memorable domain name like john.hsbc. Users can receive payments without revealing their personal information. Think of it like having a secret code that only the bank and the person you're sending money to know, which is almost impossible to crack. It's like the secret internet address that only the bank and the people they're sending money to know about to keep money safe and ensure money goes where it's supposed to. One key advantage of using a decentralized TLD system in payments is that it can provide a secure and transparent method of transaction processing, without the need for intermediaries such as payment processors or clearinghouses. Banks may prefer to use a decentralized TLD system over SWIFT codes for several reasons. 1. Increased security. SWIFT codes are vulnerable to attacks such as SWIFT network breaches, which have been reported in the past with millions in losses. 2. Faster settlements. 3. Lower costs. 4. Increased privacy. Although decentralized TLD can technically replace SWIFT or IBAN, we believe it should be used in conjunction with existing payment systems to provide additional security and transparency. For example, a decentralized TLD could be used to verify the authenticity of a SWIFT code or IBAN, reducing the risk of fraud and errors in cross-border payments dramatically. This will enhance IBAN and SWIFT functionality and save banks billions. By way of a simple analogy, think of the following. Imagine you want to send a letter to your friend who lives far away. You need to write their address correctly on the envelope to make sure the letter reaches them. However, sometimes hackers can try to change the address on the envelope to divert the letter to a different place. This is where a decentralized top-level domain, TLD, can help. Banks use a system called SWIFT to identify and send money to the right place, but SWIFT have been hacked in the past, and we regularly see hackers trying to change account numbers. A decentralized TLD acts as a digital seal, guaranteeing that the payment address is genuine and hasn't been tampered with. These top-level domains are created within minutes with our technology, which currently takes over 2 years to create via ICANN. Another potential benefit of using decentralized TLD-based digital identity system for banks is that it could reduce the need for intermediaries such as credit bureaus and identity verification services. This could potentially make the identity verification process faster, more efficient, and more cost-effective. To fully understand how powerful this is, we need to understand what the meaning of Domain Name Service (DNS) is. Computers are programmed to identify information by numbers, while humans understand or relate to names. DNS resolves this communication gap by matching the two. The DNS system of the Internet works much like a phone book by managing the mapping between names and numbers. DNS servers translate requests for names into IP address. You do not type 172.20.10.1 in a web browser when trying to access www.apple.com. In the same way we allow global bank account numbers to link with their clients to secure data and simplify payments in a human-readable format. By way of example, think of the 200 million client profiles of Citibank as clients.citibank, where the Citibank portion is the new .com. That ring-fences their clients. Citibank acts as the registry operator, which means they are responsible for managing the domain names or accounts that are registered under the TLD. Easily verifiable by anyone. Fraud and human error can dramatically be reduced, and new innovative features are enabled. By the way, SWIFT charges banks $50 to $75 for every error daily, so this is a serious problem being addressed as it will save banks millions. Banks can also expand to non-bankable assets and become more flexible in terms of ownership of real estate art. cryptocurrencies, and many more, and execute transactions on behalf of custodians holding billions currently like BitGo. BitGo alone has over $60 billion under custody. Having your own TLD can also help improve your business's or bank's online presence, especially in terms of brand recognition and more secure logins. Our vision is clear: to reimagine payments and digital ownership with 2 strategic implementations. 1. Start with the early adopters of crypto enthusiasts and tech-savvy millennials/Gen Z with our robust, non-custodial Qi wallet to validate the performance of Key blockchain as a payment rail, as we realize adoption of banks will take time. The Key wallet can almost be seen as a super app Coinbase wallet that IPO'd for $100 billion. 2. Become the SWIFT for banks and the world's most efficient payment rail via standardized API that can easily be integrated to almost 10,000 banks immediately via our partner. We have developed a very decisive and clear roadmap on how we intend to onboard the next 100 million users to the Key wallet, as we believe the wallet of 2030 will offer features and convenience beyond money. The Key wallet offers users a powerful place to buy, store, and sell various forms of NFTs, other digital assets, and play blockchain-based games with true item ownership. This is a marketplace where any developer globally can list their game or app, like Steam, to their direct audience and have global customers from day one. The merit and efficiency behind blockchain are undeniable, and we believe that companies not adopting this new and exciting technology may experience similar loss of market share like BlackBerry experienced when they believed iPhone touchscreens would not be able to surpass QWERTY keyboards. According to a Finistra study, banks already lost 10% of market share to fintechs due to their inefficiencies. Simplicity is the ultimate sophistication, as the speed and ease of managing money will continue to increase. With banking becoming more accessible around the globe, one thing is certain: wherever technology goes, money and banking will follow. The simple question you need to ask yourself: would you rather pay your friend in Japan with confusing SWIFT, IBAN, and routing numbers that can take up to 5 days to settle, with up to a 10% transaction fee and risk potential Forex losses? Or pay him within 10 seconds by simply typing his name ID at a fraction of a single percentage in fees? VortX Capital, a technology company reinventing payments and digital ownership. Soon, every kid around the world's first bank account will be a Key wallet. www.vortex.online